What is up, Pack Real Estate? I have got a ton of stuff for you. I'm going to try and keep this video under 4 minutes, but a lot of stuff's happening out there and I want to help you sell more homes. So let's dive into what's happening with mortgage rates in the economy. Basically what's happening is the tariffs are causing the stock market to crash. So all the investors who would normally keep their money in the stock market, which is risky, they're pulling that money out and they're buying more secure investments like bonds. Now, mortgages are a bond or a 10-year bond. You're investing in debt. So they're buying mortgage bonds because the stock market's scary. And the more they buy mortgage bonds, the lower the rates go. So we're about 1% lower than where we were last year in April. And as long as we keep hearing talk about recession, tariffs, stock market crashing, unemployment, we'll continue to see mortgage rates fall. The one risk there is inflation. So tariffs can be inflationary. That would counterbalance the drop. But anyways, we're about 1% lower than last year. That's the good news, even though our 401ks are lower and our IRAs. Maybe we'll see a little buyer surge out there over the next month or two with these lower rates. Next, I got a class coming up in the office, establishing your value with clients. We're going to talk about how to win over a client, get them to sign that buyer agency, and how to win over a client, establish your value, and get them to sign that listing agreement. So I am not a real estate agent, but I am in sales. I meet clients face to face, and I have to get them to agree to go into debt for the next 30 years. So I am really good at this, and I want to share my tactics, tricks, sales skills with you. Okay, so come to the class, sign up, and we will show you how to get buyers under contract, sign their buyer agency, and the same thing with listing agreements. Next thing I have, if you are working with luxury loans or properties, so loan amounts over $1 million, we have a 5.125% interest rate right now for our luxury buyers. The way it works, it costs 3 points. So on $1 million loan, that would be $30,000. Now we give up 1 point. So now we dropped it down to $20,000. And if you have a buyer looking in that realm, we ask the seller to pay that. So you can all negotiate $20,000 from the seller. We can, on that price point, we can get that client in at 5.125% while it lasts. On the flip side, if you have a listing over $1 million, you can market that 5.125%. We'll still cover 1 point. Seller covers the other 2 points. So seller's got to be willing to give up $20K on that listing. And if they do that, we can advertise that 5.125% to the market and get some more buyers for you. So let me know if you need more information on that. There's a couple things we need to talk about with regards to that, but give me a ring. Last thing, if you have a deal where another lender said no, you have to call me. So we do portfolio loans here. That's non-QM portfolio, no tax returns required, no income verification required. If another lender says no, call me. We could save a deal for you. So I just want to remember that, you to remember that. It works very well with self-employed individuals. So that's a lot. I kept it under 4 minutes. If you need me, let me know. Sign up for the class and I'll talk to you soon.